All right, last highlight of the week. We had some busy markets because coronavirus, then Boeing comes out mid-morning and all this stuff to make this market on eggshells. Real quick, as soon as you start to understand congestion boxes, you got to understand when you're at the top of one or at the bottom of the one, bottom of one. You got to understand maybe context that get you bearish, and then the box that forms, and see where you are location wise, top of the box, bottom of the box, and then tie in order flow. Again, this is if you're bearish and looking to pull the trigger to get short, and this is the progression we often talk about in the room for the ready, aim, fire approach. So now we go from this chart, which is just a simple bar chart on 4PNF, to our footprint chart with kind of drilling down into some order flow. When you see, or hear in this case as well, a female voice that's selling and a male voice that's buying. Now we know that 29, 75, and 30 even roughly is the top of a congestion box. If buying comes in, it should go up in price. It doesn't matter what the product is. So the clue is when the market doesn't do what it's supposed to do. When it has buying, it should go up. And so these are qualifiers to get someone who's bearish short and the confidence to replace the fear with. So let's play it and listen to the voices on the right side of the screen. This is the top of the box on a footprint. It's rotating back and forth.
9 3/4.
There, I'll pause it. You heard selling and buying 9 3/4, and it lights up green. Should go up on this imbalance. Aggressively they came in and jumped on those 29.75s.
9 3/4.
It doesn't.
9.5.
And he comes in at 9.5 again. When I say he, the market. Look at this imbalance. When it goes back to 9.5 offer, 9/4 bid, 9.5 offer, they're aggressively buying this damn thing. It can't go up. And if you learn to slow down the market, you follow it better, you'll trade it better. If you're not watching it, you won't catch this. And if you don't catch it, you'll be just behind the qualifiers to get yourself in a position for better locations. You don't have to be a super short-term trader to learn this stuff and understand it and then use it, because you're looking to maybe get short on a bigger move lower, and these are the qualifiers to put yourself in a position to take less heat. And that's the definition of a good location. Taking less heat and having it pay you ASAP. The sooner a market does this, be great if every trade did this. It's not, but there's a lot of them where you create the probability and you wait for this trade to set up and hit you in the face. And it's great when it goes your way right away like this, than to sit with it at your price or slightly against you. The sooner it starts paying you, the better the location was. And no matter how long you've been trading, no matter how successful you might have been, we're always fighting and looking for better locations, period. If you're a real estate investor and been really successful, what are you still continuing to do to flip houses? Location, you're always fighting to find better locations. So as traders, the new traders or traders who never turn the corner, it's because they never really worked really hard on better locations. They never even found the tools to find better locations or understand how important locations are. They think opinion's more important. It's not. Opinion's important, but it's not more important. So if guys who have been doing this for almost forever, and I hate to say that because I feel like I'm getting old, it's been 20 years in April that I've been trading in front of a screen electronically. If we're still fighting and looking for better tools to find location, why wouldn't someone who just started? You know, everybody wants the red light, green light, and have an indicator do the work for them. Well, how well is that working for you? If a system worked 90% of the time, I wouldn't sell it to my mom. So if there's not a system out there that you're going to want to buy, there might be people out there that you want to give your money to and then hit the snooze button when the alarm clock goes off and just meet him once a quarter to see how he's done. But you're not piggybacking to success. It will not happen. It will not happen. You want real-time analysis with tools that make sense because they're showing where people might be trapped. So it's not you. Have a great weekend. And watch the the tape with tape bombs, as we used to call them, because of this coronavirus, and when it surfaces and there's new ones here or there, it's keeping a lot of pressure on this market. And then you throw and sprinkle in some slightly other weak components like Boeing cutting production on a different plane than that, whatever that was, that MAX 737. It's a different airline. So that stock has gotten beat up. That weighs on the Dow, which weighs on the S&P. And then you get further, further weakness. And you're going into a weekend, so people might not want to go into the weekend long. And you got this impeachment still kind of a gray cloud above us. So everything has this market where it is right now. If we go to real time, we're on the dead lows here at 11 o'clock Central, 11:15 Central, and moving lower. There's no coincidence that this market is on its lows with all that's going on and all the pressure. We'll have rallies, right? But it's just skittish. It's on eggshells, and it's like a cocktail party, and everybody's looking at each other to see the first one run to the door. But have a safe weekend and make sure you're paying attention to what's driving the market.